Hello everyone, welcome back to another lovely trading live stream. We're starting off looking at AMC because obviously Friday after the close, it did come out with news that the court rejected their appeal to basically convert the APE shares back into AMC common shares. So as we're not seeing that, obviously we did move quite big off this. You can see we've given up most of the gains. We're up now 12, we're having a 20% gap up right now. We were up basically 100% from the after hours move. And what you can see by this is this move here was, basically 100%. If we go from near enough bottom to the top, you can see, we moved 100, well, just over 100%. Now again, this, and we did cover this on the Friday, so you can always go back and check that video. We did talk about this saying, what happened is, yes, relatively good news. They cancelled, they kind of rejected more dilution to the shares. But overall, the company is trying to do it. And obviously, if you're a shareholder, why would you want to be investing in a company that's trying to dilute your value? And then not only that, I think it was their CEO who then came out and said they're going to appeal the decision and try and find another workaround. So likelihood is they're still going to try and dilute your shares, which again is going to cause them, or should cause them, to continue to sell off. So that's one thing kind of quite key that is to note. And that's why, we are still quite bearish on AMC. I did say if we popped up on the open, I would look at it short bias, but from $5, it's not crazily overbought. So what you can see here, these are the key levels we did cover in the analysis videos. What you can see is this first deviation here. This is our first deviation on the 6 month. Then you come into this value here, our second deviation on the 6 month, and our first deviation from the 1 year. And then you have our third deviation from the 6 month. So coming into all of these levels, these ones we don't consider too overbought. It's this third deviation above. This is where I like to be short bias. Obviously, we could have traded it after hours, but you take on that risk that you can't define the risk, because obviously after hours there is no options. And that's why personally I took a quick kind of scalp trade after hours, but that was about it. I wasn't holding over anything over the weekend, and wasn't really going to take any trades pre-market either, because again, there's no options. I can't define that risk. So to me, it just seems there's too much risk on the table. So I do just want to note that if we do see another move to 730 or higher, I will be trading this short bias. But in the meantime, as of right now, to me, there is no trading opportunity. It's pushed back to where we should kind of be seeing this stock, because again, it is overvalued. Even at this kind of area, if they're trying to dilute your value or dilute the shareholder value, it deserves to sell off. It will probably push back to those lows. So unless we pop above $7, to me, no trading opportunity on AMC, but we will be paying attention to it. So we'll cut over to the other screen like we normally have. So there you go. But yeah, we're definitely going to be paying attention more than to AMC today to see how it moves. Again, we can still pay attention to that Cvna move, basically flat though on the day. American Express down 1.5% or 1.25%. Again, they had their earnings on the Friday. AMC will put the chart there so we can keep a close eye on it. Tesla down 1% or 1.2%. So you're seeing a lot of the bigger names be down, Tesla and stocks like this, but you can see obviously the SPY did gap, or the S&P did gap to the upside, and it is continuing to push to the upside on the open. So quite a key thing to note. The bonds are quite strong on the open as well, and you're starting to see some strength in the euro, which is obviously a weakness in the dollar. You did also see the VIX gap up to just over 14. You're now starting to see it drop. We'll see if we can get that gap filled today at around 13.65. I imagine we will see that, but again, we'll just wait and see. Another key gapper today, just to note it, is TUP, so Tupperware Brands Corporation. Has been pushing kind of the last 2-3 days. Key levels on this, we're actually coming into one. That's why I wanted to note this is 158. This is our first deviation over on that 6 month chart. So if we continue to push to the upside, I am paying attention to that as our first key resistance. So I'm paying attention to that. If we did continue quite far off that, we do then have our next level at 250, which is our first deviation on the 1 year, and then 325 after that. We also have PXMD, another gap today, not near any significant levels, has been selling off, still relatively near those 52 weeks lows, and even off this 23% push, we're still only where we were coming back to mid-June. Again, obviously AMC we covered. Looks like it's actually been halted already. Yeah, it has been halted. So again, we'll see how this opens. I wouldn't be surprised to see it open and just basically continue down again. The news was good in the short term, but overall it's still negative news. So again, I would be cautious. And then we have COS, ticker KOSS. This is COS Corp. Basically retesting its first deviation, which is at 430. This is the 6-month level on our first deviation, but if we do push higher, we do then have our first deviation at 465, which is our first deviation, but over on the 1 year. So considering we kind of consolidated on this level after hours, again, I would be a bit more cautious on that. We have kind of already tested this 465 pre-market. We sold off, so actually you could be more patient. Wait for a move to 523, and then that's our second deviation on the 6-month, which would be then that next key level that I could be paying attention to. So that's one thing I'm paying attention to. Any key tickers you guys are looking at? AMC has just become unhalted as well. Big push down, coming down to $5 as of right now. Again, I wouldn't even be surprised to see this basically just be a complete gap fill. Again, just to run through, because I'm seeing a lot of new people in the stream. Again, the news was good in that it kind of blocked them being able to dilute the shareholders' value. But the news is still overall bad because firstly, the company's trying to do it in the first place. That's a negative. And then they've already said that they're going to appeal this and they're going to try and find another workaround. So again, 2 big reasons to be cautious. So just want to put that out there with AMC. As well, we are coming back to retest our, I think it's 535 yet, or it's actually moved to 538. So our 538 level, again, we'll see if we can hold or if we reject this. But that is lining up basically on par with our VWAP. So we'll see if it's just a pullback to this value and if we can sell off. Again, if we do sell off to the downside, I think a nice target would be around 480, which would be that anchored VWAP level. Also starting to see a bit of strength on Cvna pushing to the upside. Tesla's still basically flat, and we are now also seeing the SPY and the S&P in general and the bonds start to pull back while the euro stays strong and the dollar stays weak. Any other key tickers though? I guess we can see NEO, that's up just under 5% today, is actually coming into a key level that's now at 1125. So let me actually replot these because I have that, which I don't want to affect. The dash line you see already, kind of ignore that because that's from a testing thing I am currently testing. So what I will do is actually end that and then we won't have to see it. If I do that, we then don't have to see that level, and I will do the same to the other ones just to make sure they're not getting in the way of actual current key levels. So yeah, as of right now, then key level on NEO is 1125 if we can push up to that level. Just going to quickly post a stream in the Discord because I've actually forgot to do that this morning. Again, it will automatically post in there, but I like to just add everyone in case anyone does want to join. There we go. Cvna now up about 2.7%, so starting to gain a bit of strength. These levels do actually need to be updated. They are out of date. I think it will be quicker just to clear them. And we can see then what are the key resistance. We have $50.25. That's our 6-month third deviation, so we can be paying attention to that. And literally right below it we have our 1-year level, which is at $49.16. So I guess they're the key levels I'd be paying attention to today. Again, we have touched these a few times now. This is the reason we had that large pullback in the first place. So again, I would still be a bit cautious of these, but could definitely provide some scalping levels. But again, I'd be a bit more cautious on the swing side as well. Just to note, AMC retested our VWAP and deviational levels. Seems like we're seeing a bit of weakness. Again, I wouldn't be certain until we kind of break this low, but if we can, target going to be 485. We will actually run through a few tickers. Again, this week's earnings are pretty hectic. We got a lot of big names. Let me just quickly grab up the earnings. That's the wrong one. Let me quickly go and grab the updated one because that is old. So what we have, again, so today pre-market we had Domino's. We'll actually throw Domino's up on the chart. So we did get a gap up of about 2.5%, nothing crazy. But again, we can tell you why this happened, because look where you are at Domino's. So if we pull over this chart, you are extremely overbought. We were chilling at around its third deviations. Again, this happened on this initial news release. I remember we picked it up on stream, but I'm completely blanking what it is. Let me have a quick run back to see if I can quickly see what it was. Unless it was just these price hikes, I'm seeing a lot of rating increases, but it seems like a relatively big gap on that. So I can't see the exact reason for it, but I'm guessing then it might just be the price hikes. But again, we did cover that big gap because it was a big one, but we did become extremely overbought on that release. We did actually short that 402 level to 483, and then we kind of got out because again we were waiting for earnings. But what you see when you're at these extended levels is even if the earnings are well or strong, so again we had a relatively good earnings, EPS of $3.08, but even if the earnings are relatively strong, you're not going to see a massive move to the upside. The only time you're going to see a big move is if it's to the downside, and that's just because of where you are. A lot of the move was already priced in on this massive move here, so unless the earnings are exceptional, you're not going to see a massive move. And even if you do, again, to the outside, we wouldn't expect a massive move. More than 5% would be quite crazy. Whereas, again, if they didn't come out great, or they came out relatively in line, you probably would have seen quite a harsh sell-off, probably to 370 or lower on that downside move. So that is one thing. And I guess actually that's what you can kind of see, I guess, did kind of happen pre-market on the release. We did get a big sell-off, and then again, it's kind of been bought into. I wasn't really tracking them pre-market though, so I didn't really see what went on the conference call and all of that. But it is key to note. I think that was really the only big name that we had pre-market. I'm just having a double check through there. Maybe Ryanair as well, which is, the ticker's RYAAY, isn't it? Yeah. So they're going down about 6% on that release. We can quickly see from here anyway what the releases were. So year on year, massive decrease. Again, last year they had an 88 cents per share. This year they're down at 63 cents, but their sales are up to just under 4 billion compared to the 2.7 billion year on year. So that's quite key. And yeah, I don't know. I'll have a more of a deep dive later into their earnings, but again, it's an ADR. We don't really tend to focus as much on the ADRs. Usually just more down to the volume issue. You'll probably see how it trades. It won't be the cleanest moving stock. It looks like Domino's as well might come back to retest its anchored VWAP. If so, potential bounce at $389.60. So that could be quite key. Also, after hours today, I would say the only key news we have is Logitech, Whirlpool. They're probably the only two I'm paying attention to after hours today. Tomorrow is going to be a big mover. So pre-market we have Verizon, GM, 3M, General Electric, Spotify. So those should be, I'm going to say they're going to be the main ones on watch. Should have big moves. You also do have Alaska Airlines. Not as focused on that, but could be still quite a nice mover. So I mean, I'll see how the release is, but I'm not too focused on it off the bat. Main focus is again VZ, GM, Triple M, and GE, and Spot. They're the tickers for the companies. And then after hours tomorrow, we do also have relatively big names, 4 of which should have relatively nice moves, and that's going to be Microsoft, Alphabet, so Google, Snap, and Visa. So they're going to be my main watches for tomorrow's earnings as well, just to know what we have. So that could be quite key. AMC kind of getting a lot lower in volatility as of right now. Again, this could be a bit more reasonable of a level to hold, because again, what happened was still good news, but overall is still negative news. So it would make sense to have a bit of a gap, so we might not see that complete gap fill. But again, I do think it would be unlikely to see us break those highs of, $7, $8 that we saw in those pre-market sessions. Also can have a quick look, I guess, at what Ape is doing. So Ape is down 5%. So again, they're the alternative shares that you get if you owned AMC when they kind of split it into 2 different individual shares. So that's one thing to note as well. We're now seeing that Tupperware company TUP now up 95%, so nearly up 100%. Moving into some key levels again, we did note about that 158. We start to see a bit of consolidation and a bit of kind of slowdown there, but overall strength is there, and we are continuing up, so that is pretty key. Again, if you guys have any tickers you want to run through or anything you've got on watch, let me know. We can run through, see what it's all about. And let me actually grab some news. What's up, Gloria? Welcome to the stream. Just going to quickly grab up some news just so we can see if there's anything key dropping. Because SPY is kind of reversing, but again, we are still gapped up on the day. Oh, actually, 2 minutes ago, completely forgot about that release. We would have had the, was it final PMI? Oh no, yeah, the flash services PMI and the flash manufacturing PMI. So what we saw with this, nothing too crazy of a move. So again, these came out, we had 54 expected, came in at 52.4, and then 46.1 came in at 49. Again, these only tend to have significant moves when you see them change directions. So the breaking point is always at 50. So if you see this, if this came out at 50 or higher, that would have made a big market move. And again, the same for this. If you saw this becoming below 50, then you would have seen a big move as well. But again, when these come out relatively in line, or they don't flip the direction, they don't flip on that other side of the index, then again, you never tend to get a very significant move. So that's one thing to note on those final PMIs. But again, they never tend to make a massive move anyway, so there wasn't too much focus on those. Just seeing if anything else, you see the US waste potential deal with China on fentanyls. Again, if you haven't already seen, not really going to move any markets, so Elon Musk does want to change, or is going to change, the Twitter logo to an X logo, which does say it goes live, should be live today if it's not already for you. We also see a strong majority of business economists now believe the United States will enter a recession within the next 12 months. Again, this is from an NABE survey. So that could be kind of key. Tesla executives are to meet India's commerce minister this month to discuss plans for a factory to build a new $24,000 car. I don't know if that $24,000 though includes the incentives that they get. If not, then again, that could be a really kind of breaking product, and could definitely be cheap. But again, we did see Tesla, I don't actually have the chart right now, but we did see Tesla actually down on the day today. If I quickly put it there, yeah, we are down about %. Looks like we're gaining a bit of strength now. Looks like if we can hold this VWAP again, could push up, could get an ISO potential short at that 261.50, which would be the anchored VWAP. Okay, we're seeing a slow grind down as well on AMC. Again, if we can break that low, cracking down, we then got that strong support of the anchored VWAP. So I would be a bit careful on the short side now, even though I'm overall more bearish on the move. Again, I would be careful coming into that anchored VWAP because that is a high probability bounce location. Also saw a lot of volatility on the bonds off those flash PMIs. Just to note that, again, this is a 2-year bond. Basically just a fade, which is normally the trading thing you can, or how you can look to trade these releases most of the time anyway. Again, if we cut this into a 1 minute, a lot of the times that will actually provide a fade, which you can see in this case it did. The release comes out, moves the direction, comes back, retests it, and then that's the trade opportunity over, and then it will pick its direction that it wants for it to go. And in this case, it was taken more negatively, and we are starting to sell off. So wanted to note that. Again, the euro dollar quite key. Obviously, we had a strong sell-off, or strong weakness in the euro, strength in the dollar coming out kind of really early hours today, 2:30 a.m. Again, we had a lot of international news coming out. So let me quickly grab those up. So what we had today, we had the euro flash PMI. So that's actually by France or French. So yeah, the France flash manufacturing PMI and flash services PMI came out. They came out relatively in line. Again, didn't break the index direction. Then you had the German one come out 15 minutes later. Again, they came out relatively in line, didn't break the index. And then you had the overall Eurozone flash services PMI. Again, came out in line, didn't break the index. And then at 9:30 a.m., you did have, so again, when the US market, actually, no, this is UK time for some reason. Let me quickly go on there and adjust that so I can normally see it in US time. There we go, Eastern time. Oh yeah, so that makes a lot more sense than when these were coming out. So again, this is now in market time, this is now in Eastern time. When these releases were coming out, it was around 3 a.m. to the latest 4:30 a.m. for the Great British, or the English flash services PMI. Again, across the board though, nothing broke the index. Again, what we mean by that is paying attention to 50. If you're forecasted, you know, here 53.1, as long as you come in at 50.1 or above, you're never going to see a massive reaction. If this came in at 49.5, obviously that would have been a massive reaction, but when these come in line, again, they're not too significant. But you can see that's the big move from the euro dollar, if you were paying attention to the FX side of things. We are starting to see obviously a bit more of a bounce of that. We tested yesterday's low, well, Friday's low, and again, potentially retest it. We'll see if we sell off. SPY and the ES coming back into their anchored VWAPs. Again, these can be good and strong bounce locations, so could potentially be holding on, looking at those, seeing how we react. Again, we have now come into the anchored VWAP on the AMC, so this is key. This could be basically its turning point. If we hold this, we could have a potential strong reversal to 538. But again, not going to trade it because overall I do take the news as bearish, so I don't want to take the long plays. But if we do crack through here, retest it most likely as a resistance, that could be that strong move to potentially fill that gap. And then, you know, we see AMC basically flat on the day. So that could be the potential move that we can see over on AMC. Let me know as well, are you guys more bullish or bearish on AMC? I think I can do a poll for that, so I'll throw that on. So I would be interested to see what everyone else is looking at. Let me do that. Yes, I can do that here. Okay, create poll. There you go. So yeah, guys, let me know. I've just posted the poll then. You should be able to see it now. Let me know if you're more bullish or bearish on AMC. I'm definitely interested to see what you are. Again, my view on it is still quite bearish. The overall news, I think, is relatively bearish, even though in the short term could be bullish. But again, we are now starting to see that bit of a bounce off this anchored VWAP. First few green candles we've had in about the last kind of 10-15 minutes. So again, we'll see if we can get that bounce. For targets, if you were taking this long, I would be targeting VWAPs of 525 and the deviation level of 538. Past there, I wouldn't even try and take it long bias, because again, I do think that news is being taken relatively weak on the day, so I would be cautious. Let me quickly open up that as well so we can actually draw. There we go. It seems like as of right now, everyone who has voted bullish. Bearish. Again, yeah, getting a bit of a bounce off here, 20-ish cents as of right now. Again, final target would be kind of 538. I wouldn't be looking to hold any longs past that level. Strong sell-off now on Cvna as well. We flipped negative on that. Domino's tested its anchor VWAP. Looks like we're cracking below. And this could be down to the SPY and the futures. Basically just really taking that. I'm guessing it's the final PMIs are taken relatively negatively. But we are selling off strong. Not even really holding that level at all. Just broke straight through. See if we can get that retest then. Because if so, that could be our final sign to push lower. And 452 could be that key target on the SPY. And if we're looking at the key target on the futures, that would be probably 4,564, which would be the Friday's close. So those would be the key things I'm paying attention to on that side. What we'll do is we'll do that. We will run through. I'll play this, but I won't actually have sound on, so we can continue running through stuff. It's on a commercial break anyway, so then that doesn't matter. We've actually had a lot of alerts go off today, so we can actually start flicking through some of these. So we did have AMC. Obviously, we've been talking about that for a lot of the day, so we're fine on that. Dominoes, we've actually gone through that as well. Again, targets. Actually, we can actually get some new levels out on the Dominoes. So let me quickly grab that. There we go, because these levels would have actually adjusted ever so slightly. So if I zoom that out, so we have 372.60, which is our second deviation on the 1 year. So that, sorry, on the 6 month. So that would be where we now, that could be a potential support today, and actually right above that, 377.2. We then have our first deviation, but that's from the 1 year. So again, zooming a bit out on, that's not updated on here for some reason. There we go. Again, if we continue down, these I guess are the two key supports I'm paying attention to on Dominoes today. For some reason this is now playing. I thought I muted it. I did, but it was glitched. Oh well. So again, those are the key supports I'm then seeing on Dominoes. For the key resistances, we have $399.79. Again, you could just be looking at the $400 psychological level. That would be our 6 month level. That actually makes sense why on the open then we tested it, failed, retested it, we failed again, and now we're getting that strong sell-off because the sellers are just overall in control. But if we did retest that and break it for any reason, we then have 407.84 as that kind of final key resistance to the upside if we did continue any higher. So again, that's what I'm paying attention to then on Dominoes, to then see any other names. So we then had CVS alert go off. Let's see what CVS is looking like. So CVS up 1.5% today. Don't really know why the alert went off. It's not that near to the level. So I'm guessing they've just readjusted, so I'll replace it. But the key resistance then on CVS from where we are now is $79 dead on. And that's our first deviation from the 1 year. So that's what I'm paying attention to if we continue to the upside. And then we have more alerts. So we have Nordstrom, so ticker JWN, up 4% today. Looks like we're coming very close to our second deviation from the 6 month level, which is at $21.96. So it could be a potential resistance, and a few cents above that, so at $22.06. We then also have our first deviation, but from the 1 year perspective. So key levels on Nordstrom, if we can continue up, I will actually set an alert out, because that will probably be actually a swing trading opportunity I look to play. I like the idea of that one. So that's what I'm paying attention to on that. And then the only other alert we had off today was J&J, which is Johnson & Johnson. They're up just under 2% today. Looks like we're coming in to kick some key levels, and that's at 173.97. So let me quickly update these. There we go. And then we also had 171.77 for that. That alert, actually won't have heard it anyway because I don't have it down on currently for Thinkorswim. We have just hit 10 AM, but obviously you can see that at the bottom left. So there we go. Those are the key levels on all the alerts that have gone off today. Again, AMC. I think I needed to sneeze. Doesn't seem so. Again, Cvna selling off now, down just under 3% on the day. Starting though now to see a bit of strength over on the SPY and the S&P futures. Again, the 2 year bond hasn't really moved at all since that final PMI or flash PMI. Euro dollar again pretty flat in the last 15 minutes or so. But again, we are seeing Cvna down now over 3%. We're seeing AMC get a 20-25 cent pop off that anchored VWAP. Again, like we expect, you normally get bounces off these, but I didn't personally trade it. I don't like how we're taking the news. Again, it is relatively bearish, so I didn't want to jump in and it not get that bounce. It looks like we've retested it again, potentially a bit of strength. If we can break that recently created high, then obviously you can target VWAP, and I wouldn't be holding past that 538, which is our first deviation 6 month level. My main focus is on AMC. If we can start breaking below the anchored VWAP, testing it as a resistance, and we can hold, really can just target the downside at around 440, which again would be that gap fill. My main thing I'd be paying attention to. Seeing Cvna crack down a bit more, now hitting $44 for the first time in the day. Seeing Johnson & Johnson kind of get a strong pullback out of nowhere, even though the market's relatively strong right this second. AMC is popping quite hard again. Now we're up at $5.10. So we'll see how we can start moving on these again. My main focus is if we can push that bit higher on AMC, potentially could actually take it short ourselves at 538, have a relatively tight stop, maybe above 551, 552, risk, 20, well, less than 20 cents on that. If it goes against us, we lose what we lose. But if it starts to pull back, we could really get a great entry, look to play down to the anchor VWAP, take a bit of profit, and then hopefully play a bit lower. So that could be a potential trade plan I'm looking at then on AMC for the day. Domino's as well, kind of hesitated on the anchored VWAP for a bit, but really now breaking down. We will most likely continue down to that 377, which is our second deviation from the 1 year. So strong support if we can come down all the way down to that level. That's a quick sell-off we had in Johnson & Johnson as well, was instantly bought back up. We're back at those highs on J&J for the day. Tupperware as well, ticker TUP's giving up most of its gains. Again, potential long on that anchored VWAP tends to work quite well on these momentum stocks. BBIG, so Vinco Ventures, usually quite, well, it is a frequent mover. We see this move to stock very often. Now, the one issue I have with this stock, especially if you're looking at it on Thinkorswim, don't get confused with how the stock's been moving. We did actually cover this, I think, a few weeks back. Now, this move is not a natural move. This was a reverse stock split, but for some reason, just not been updated on Thinkorswim at all. And it has been over a month now, so I don't know what's happening from that perspective. But again, we are gapping. We have now broken our third deviations. I'll grab those levels on Tastyworks because, again, on Thinkorswim, they're just incorrect levels as of right now because it's not adjusted for the reverse stock split. So let me quickly grab the actual levels. But apart from that, I think there are no other key movers or frequent movers that I'm really paying attention to. Neo's still up on the day. Tested it to the penny, the level we gave earlier, that 11.25, sold off quite nice, sold off 25 cents off that level. Potentially retest again. If you get that retest, a lot more likely to break on that second move, so we'll be a bit more cautious. Again, Mullen, no surprise here, down another 12% today, 10% now on the day. Really no surprises there. Fubo starting to sell off again, did hit those key levels. 328 was its second deviation on the 1 year. We hit that, and ever since really starting to sell off that bit more. And I think they're the key ones from the frequent movers. We're not even seeing really GameStop really react too much off that release. We saw it go from $22 to $23.60 after hours on the Friday, off in relation to the AMC news. But overall, selling off basically filled that gap. So again, wouldn't be unlikely to see AMC potentially follow in its footsteps. Again, just trying to get those key levels then on. Well, actually, for AMC here, we can get that. We'll throw Domino's we have up, Cvna we have up. I guess we can throw maybe some BBIG up here so we can see how that's moving intraday. Again, just loading up actually Tasty Trade. Let me just log into my account and then we can see what the levels are on that, because again, Tasty Trade actually has updated it, because I remember when I checked it out recently, I had to do my analysis over on there. Okay, there we go, BBIG. Go over to those charts. Hard to borrow as well, just a note on the BBIG, so it could be a bit more difficult to trade. I don't think they have options, I could be wrong though. Oh no, they do have options, so we're all good. Let me go to the charts. Okay, that's not the chart I want, I think that is. BBIG, BBIG. There we go. Okay, so yeah, we're not really that overbought then when you actually look at BBIG. So we did break the 360 level, which is our first deviation on that 6 month. But you can see we're not really that overbought. 670 is our first deviation on the 1 year. And then if we break higher, $8, second deviation on the 6 month. And then coming into 12.35 and 13.35 as those next key levels. So I guess main resistance today is pay attention to kind of that 670, and we'll see how that reacts near there. I guess I will plot it on the Thinkorswim charts as well, though, just so you can see it. I can't really get rid of this tasty trade. It's glitching up for some reason. Hopefully that will fix it. There we go. So I don't remember where that level was on this side. I think it was like 360, so around there. Again, so that would be the 6-month level, and then I think, did we say 670 was the 1-year level. So I'll plot those on just so you can see where they are. But again, for some reason, these Thinkorswim ones have not been updated, and they are definitely lagging behind. Starting to see Cvna maybe bottoming them out down here, down 3% on the day around that $44. Seems buyers keep stepping in at $44. Again, Domino's still selling off, probably going to hit those targets. AMC kind of retested, we're still holding this anchored VWAP. Again, paying attention to that 538, can be short buys from there. Look to play that downside move. And I guess those are really those key things on watch. So what I think we will do now is put the news on, let's pay out for a bit, give my voice a bit of a break. But again, if you have any questions, obviously I am here.
Is coming down in the U.S.
It takes people to look for another job.
For every bear argument, I could do a bull argument.
I know you can.
There's this funny phrase that's coming up in the research notes: immaculate disinflation. And this is where the market is right now. It's if you believe that we can get away with bringing inflation all the way back down, or the Fed can, without ruining the recovery and the jobs market, that's what the market is telling you. A lot of folks will look at that and say that's impossible. Inflation's going to be too sticky. But that's the soft landing.
Got it.
You heard it here.
Immaculate reception. You probably don't know what that was.
I do know what that was.
Do you?
The Immaculate Conception?
No, reception.
Oh, reception.
Yeah, Franco Harris.
Oh,
you know,
no.
Pittsburgh Steelers.
Thought you were going like biblical.
Oh, no, we're not going to go biblical on this show.
All right, let's dive deeper into the market outlook. RBC Capital Markets Head of Equity Strategy, Lori Calvasina, here at Post 9. She's got an S&P year-end target of 4250. See, I thought of you as more on the optimistic camp, but now that we've surpassed your target, what do you do?
Well, you know, it's funny. I mean, I keep getting accused of being a bull because I think we sound more bullish than a lot of other strategists. And look, I think targets are tricky, right? I've told people we have sort of 6 different models we look at, and 3 of those are pretty conservative, and 3 of those are pretty optimistic. And if you look at the more bullish ones, the valuation one in particular can get you to 4,700, 4,800 pretty easily on the S&P. There's another one that's been more constructive, our sentiment model, which was really bullish to start the year, and that one's actually starting to flash some yellow signals. So it's not quite flashing red just yet, but I've been telling clients I've been meeting with recently, I expect it's going to get there pretty soon. So I think the cross currents right now are just incredibly complicated.
What about what we were talking about, the outlook for the Fed, which is so key in determining how, I guess, you have to forecast the market these days? Do you think the market's got it right?
I think so. I mean, I think the Fed doesn't generally want to surprise markets, so you do have to look at market pricing heading into these meetings. But I think if you go back to the debt ceiling, there was all this confusion, right, about why the market didn't collapse. And I think that the market ultimately liked McCarthy trying to push back on spending. And in talking to a lot of investors, they want the fight with inflation won. So at least on the equity side, I think people are like, okay, if we have to get another hike to, you know, sort of show that we are serious about inflation, to make sure we're really beating this thing down, I think equity investors are actually okay with that.
You're talking about September as well as July?
September, I don't think it's clear. I think that's more data dependent. And when I talk to investors, you know, that's sort of the approach they're taking as well. They're not really expecting necessarily 2, but 1 I think is pretty much baked with a lot of the equity folks I speak with.
I mean, last time you were on with us, July 5th, not that long ago, you were sort of talking 4,600 as the tip top for your bull case.
Yeah, so we actually updated our earnings model, and we pushed up our earnings number. I think it was around 213. We pushed it up to 219. We updated our valuation model, which is actually dependent upon inflation expectations. So you had some movement on both of those, and I think the number was like 46, maybe like around 34 or something like that, and it pushed it up to like 47, 40 something. So it's pushed it up by about 100 points. It's just the math on the housekeeping on the models.
But again, just listening to you, I mean, are you more cautious or not? I mean, you know.
I think that through year end, I think that the valuation and the earnings backdrop is supportive of further gains. There are two things that are bothering me. You know, I think people are starting to chase this rally a bit too much, and we see that in the AAII data. You typically want to sell the market when it hits 30% in favor of the bulls, and guess where we were last week? 29.9. Okay, now I need to see it go to that 30% on a 4-week average. We've had a bunch of 20% numbers. I feel like we're going to get there before the end of the year. Now, it's possible we could sit there for a while and we could be having the same conversation in January, or we could see some big profit taking before that. The other thing that's starting to bother me, and we wrote about this in our weekly today, is the money flows. So coming into the year, everyone said, hey, all the money's going to go into bonds, not equities. Well, guess what? That lasted for a few months, and now we started to see all this money going into equities. But that's actually starting to fade if you look at the large cap part. So we had been seeing geographically money going into the US, Canada, Japan. That's all starting to ease up a little bit in here. So we're starting to lose some of that money flow support as well.
So you see positioning as a real reason that the rally should end?
I think it's becoming the big risk in here.
Quick update on our AMC poll. We got 83% voting bearish and we have 17% voting bullish. So again, we'll start seeing how we do. We're starting to see a bit of a bounce on the SPY, testing its VWAP. We'll see how it reacts. The VWAP's nowhere near close so on the ES futures, so nowhere near as strong as resistance. Could definitely see a push. Does look like that ended up being a potential bottom or a temporary bottom on Cvna, which again makes sense. We expect to kind of see that move. You see that consolidation at the bottom. Again, you can normally have quite tight stops. Look to play a direction. Again, you don't always have to take them long bias. Play it any direction you want, but on these, again, you can have tight stops and look for, you know, very potentially quite far off target. So again, on this, targeting VWAP at least 45.65. BBIG again, obviously strong momentum, up just under 50%. Did test its VWAP, seemed to hold to the penny, and now potentially breaking this top. We'll see how we move though. Again, Domino's did get a bit of a push up. Ideally, we can retest the anchor VWAP, because if we can hold that, strong chance we can break down. AMC has now hit that target as well of our VWAP, so if we can break that, we have one more target up about 20 cents from now, which would be at 5.38, which again is at first deviation from the 6 month. So if we can hit that, that'd be a nice resistance and a nice target. Then from there, back to being short bias, and again, if we can break the anchored VWAP, which again is always going to be a support to really struggle through. But if you can break it, really looking for that gap for around 440, which could be nice. Again, the anchor VWAPs on the including extended hours are very different. So if we did push up, we do have a nice resistance kind of coming into around 620, 635, 644. Lots of key levels there, so that would be another potential short if somehow we did break that 538. But again, I think that would be hard considering this is being taken as bad news. Cvna again showing strength now, up at $45 again. SPY's breaking through that VWAP, so everything's starting to show now a lot more strength. We did get another vote as well on the AMC poll, so now we're sitting at 86% bearish, 14% feeling bullish.
A huge run over the course of the last 3 months here on the stock, and that now the execution for perfection has now been priced into these shares. We know Tesla has seen some pretty decent moves because of its price cuts, and the margin effect hasn't nearly been as severe as some had hoped. So Tesla shares up about 0.25%. Now, when you put that in the context of the bigger technology mega cap-ish trade that's going on, there are 5 stocks in the S&P that have at least doubled in value so far this year to date. And 3 of them are in tech or tech-related stocks. We're talking NVIDIA up about 200-some%, Meta Platforms up 142%, and Tesla up 111% as well. So these 3 stocks, by the way, the other 2 are cruise line operators, right? Royal Caribbean and Carnival. They're the only 5 stocks in the S&P that have at least doubled so far on a year-to-date basis. Now, we also mentioned a big week ahead for earnings for S&P 500 companies. Roughly a third of the entire index is reporting. Some
Don't know what's happened here. Can't tell if it's lagging or if it's my internet, so I'll try and sort that out. I'll just reload it. Just as a heads up as well, BBIG is currently now halted. So we'll probably be waiting about another 4 minutes until that becomes unhalted, and we'll see how we do. But again, considering it halted to the upside, could be quite bullish on that move.
Or not so fun week, depending on where you sit. Thank you, Dom. Dom Chu. And by the way, as Tesla just went positive there, so did the NASDAQ. NASDAQ comp up now a tenth of 1%. As we head to break, here is our roadmap for the rest of the hour. Markets pricing in another rate hike this week from the Fed. Former Fed Governor Randy Kroszner joins us with more on what's next.
Plus, Barbenheimer proving box office behemoth, what it means for stocks such as AMC, IMAX, Mattel.
And finally, we've got the big tech playbook ahead of a huge week of results from Microsoft.
Waiting for my internet to come back. It's dropping frames. Everything's going a bit laggy for a sec, so just trying to get that sorted. Okay, we should be back. I'm just currently using my phone hotspot. Again, I'll try and just leave that a minute or two, and then hopefully the Wi-Fi is working again, and we can switch back to that. Again, SPY's hitting yesterday's highs, so again, key resistance. Domino's retesting its anchored VWAP. We'll see how that reacts. AMC breaking through its VWAP. So again, 538 is that key target now on the resistance side. On what I'm paying attention to. Starting to see the euro sell off, so again the dollar's getting strong. Bonds starting to sell off slightly. SPY showing strength. Looks like it's now going to break yesterday's high. And again, Cvna now getting quite slow, but staying around that $45 mark. BBIG still halted, so we'll see how we can react once we come out of that. Again, I'm potentially more bullish on that open, but again we'll have to wait and see.
Sure, yeah, futures market. About that second hike this year, which is one that's forecast by the average Fed official. Guidance from the chairman Wednesday is going to help set expectations. But there's a reason to think that second hike could happen if you look at the real or inflation-adjusted funds rate as they forecast it. One way to figure it is to use the one-year inflation expectations, subtract that, the 3.9% from the nominal funds rate, you get a real rate of 1.3%, a number that, by the way, only turned positive in February, which means the Fed has only been restraining the economy for about 5 months. And then look further, we look at their own forecast and use their outlook for inflation and the funds rate. The average Fed official sees a real rate of 2.4% this year, using their inflation forecast minus the 5.6% funds rate that they forecast. It declines to 2.1 next year because inflation comes down and they have some rate cuts built in, but it's still well above what you can see there, their long run or neutral rate of 0.5%. So the Fed wants to be way tighter this year and next year when it comes to the real funds rate. Former Richmond Fed President Jeff Lacker tells me they need a credible rise in the real funds rate to get inflation down. They can either hike the nominal funds rate or get a fall in their inflation rate. So Fed officials forecast a real rate that is 100 basis points or 1 percentage point tighter than they are right now. So to get there, it sees inflation coming down, but also the funds rate going up by, you guessed it, Sarah, another 50 basis points.
Right, and if you put that in historical context, Steve, I mean, we're still not that high, right?
No, it's not. It's very high relative to the last 10 years, the post-GFC period, but not if you go back further. If you look at that long-term chart, you can see especially interesting question, Sarah, whether or not right now is analogous to the mid-90s when you had a 2-3% long-running real funds rate. And the reason why it might be analogous is you have all this technological innovation happening. With the dawn of AI, the question is whether or not that beggars or begets a higher real funds rate because of the investment and capital.
Regional Bank Index, by the way, up 14%. That's just over the
BBIG now unhalted. Well, opened up a bit, but pulled back to basically that pre-halt level. Again, Cvna's basically staying flat. Domino's retesting, basically holding its anchored VWAP. AMC struggling on that VWAP again. If we do break higher, then we're looking at 538. If we continue to the downside, looking to retest that 2-day anchored VWAP, and then ideally break down and start to try and fill that gap.
perhaps better than had been anticipated?
I think the worst case situation has not been planned.